one more episode of this favorite podcast that you have in your subscribe list of Save It, Spend It, Share It. We took a small break to give you more content to prepare ourselves to restructure for this year, and we're back because we want to make sure that we give you some insight to improve your financial health. We want to make sure that you are good stewards and that you can get some ideas from the podcast today. So I'm very glad and very grateful to have here in the podcast a very special guest, someone that is very knowledgeable in the finance area. And please go ahead and introduce yourself.
Thank you, Kathleen. Thank you so much for the invitation to be part of this podcast. As I shared with you earlier, this is my first podcast, so I'm excited about being able to participate. But by way of introduction, my name is Garnett. I am the co-treasurer at the Altadena Seventh-day Adventist Church. And by way of professional background, my background's in corporate finance, where I've had the pleasure of serving and working at a Big Four accounting firm for 17 years. Okay. And I've also had the opportunity now where I serve as the Chief Financial Officer for a publicly traded biotech company. And I've also helped to serve as the CFO of a single-member family office. So I've had the opportunity to work with a high-net-worth family out of the West Coast here. This has provided me opportunities to learn both corporate finance and also the practical ways of managing money on a personal financial level.
Great. So you have experience in different areas.
Yes.
So,
absolutely.
That gives you kind of perspective on different ways of handling money, right? Handling as a corporation, big expenses, a lot of cash flow. But then at the same time, how does that goes into smaller steps, right?
Absolutely.
Every steps count.
Absolutely.
And one of the things that in the corporate world and everywhere is credit lines. Mm-hmm. That's very enticing, and that's something that a lot of companies go bankruptcy because they don't know how to manage credit lines. So if this happens to be corporations where you could have that there's a lot of personnel, then how easy it is for an individual like me to, to fall under that trap.
Absolutely.
So what would be your definition of a credit card?
Sure. Excellent. So one of the things I've learned over the years is the way to approach money. And think of money as simply a tool. And if you think of money as a tool, then you think of credit cards an extension of the same idea. A credit card is just a tool. But the challenge here is, just like with a big corporation and an individual, if you don't manage it effectively, it can actually have a devastating impact on your personal finance. Within that context, I've often would say it even to my kids who are young adults or becoming young adults, that they need to have a different perspective when it comes to money. If you see it as a tool, you have to ask yourself, how am I using this tool to help me to get where I want to go? And is it getting me where I want to be? So when I think of credit cards, corporations use credit cards as a way to expand their ability, to operate and to grow, and ultimately, as they say, increase shareholder value. But if you think of that from a personal perspective, is this credit allowing me to increase my net worth? Is it allowing me to have more down the road, to be able to do more, to be able to share more? So if you think of it in that context, we can go deeper into what are the best ways to approach it.
Yeah, I like the concept of seeing as a tool, not a resource. Because a lot of the times, we see it as money that we can advance ourselves, right? Because in the moment, I don't have a debit card or I want to get the points, I want to get the rewards. So let's just go ahead and slide the card and forget about, what happens after. Who's behind the curtain,
Very common.
Yes. So you mentioned about your young adult kids. How do you have that conversation with them?
Sure. So a couple of things that come to mind immediately. First of all, let's talk more about it as a tool. First of all, the best way to utilize a credit card is to make sure you understand the purpose of a credit card. Now, understand this. I think there's 30 or 40% of households in America all have a credit card. Or carry a balance on their credit card, not just have a credit card. And the average balance is like $11,000 per family. So it's not
more than a monthly salary.
More than an average monthly salary for sure. So credit cards aren't evil. It's a matter of how do you use it. So let's see. I say to my son, if you have a credit card, the most effective way to use a credit card is to only use it to buy something that you can afford. Not afford down the road, that you can afford today. Where I've seen it used most effectively in work with high net worth individuals, they'll use credit cards to gain points, reward systems, and so forth. They use it because they also have the ability to return an item and know that the credit card company will provide them a certain amount of insurance and that. And third, they use it to build their credit score. And the way they build their credit score is that you use a credit card to establish credit, especially as a young adult for my young adult children. You establish credit, and then you manage that. Number one, you never go past, if you can help it, never go past 30% of your capacity. What does that really mean? So if you get a credit card that allows you $1,000 of capacity, credit line of $1,000, you never put on there more than $300.
Okay, so capacity not based on your income, capacity based on the credit line.
Yes.
Okay.
Very specific. I believe it is called the credit limit. So if your credit line is 1,000, the best way to maintain a good credit score is to never go past 30%. That's number one. Number two, it is important when I say only buy something or purchase something that you can afford. Not what you can afford down the road, as we said. Let's get a bit more specific about that. I would say to my kids, if you go to the store and you see something, let's use $1,000 limit, and $300 is the cap that we're recommending. If you go to the store and you see something for $100 and you have $100 in your checking account, then you buy the $100 item, and when you get home, you send the $100 in, and I guarantee you, your credit score will be good, or it will go up. But if you go to the store and you have $100 at home, and today you saw something for $100 and you buy it, and tomorrow you see something for $100, and the next day you see something for $100, thinking, well, I have $100. Well, now you just accumulated debt beyond your capacity, which is how most Americans wind up with an average of $11,000 debt. But what you really need to avoid is what we call financing your lifestyle gap. Basically, when you do that, you're buying something you can't afford. And I get it. There's a psychology behind it. When you swipe that card, you don't have to worry about it. I go home, you enjoy the item, and you'll deal with it next month because, God's willing, I'll have a little bit more money next month, and I'll just pay it off next month. But unfortunately, you're setting yourself up for failure. Now, I don't say that judgmental because we've all been there, right?
You just threw like a nice bucket, you know. Like what we go to the mall, we go on Amazon, you know, I have a list on Amazon that I keep all my wants.
The wish list.
Amazon has a way of very creative, you know, telling you, I can save the things that you like, you know, let's get it. Yep. And, you know, I have a category of different lists. List that, you know, things for the house, things, books, clothes, shoes, training, and whatever the categories is. But I also have a category that it's called I cannot afford.
Oh, wow.
And, you know, I just see items, and in my mind, I need to know what is my limit. I need to understand that even though I want to buy some things, I just can't afford them. Like, they're not. Now, the problem is that the things that I can afford, you know, I just go and grab them from the wish list. So how can we discipline ourselves? Because that takes a lot of, you know, discipline on a daily basis. How can we discipline ourselves?
It really does. And it's funny you say that too, because I was just thinking, okay, I can see a wish list and things I can't afford. Now, if it's inspirational, because one day you can afford it, if you manage your credit correctly, as long as you don't have a $400,000 Ferrari on there, I think you're good. But I think the key word, I'm glad you mentioned, is discipline. I really believe that God has given us the capacity to do almost anything. And one can learn to do anything if they do it over time, which is basically discipline, do it consistently. So applying discipline to your finances is the best way to achieve financial success. Same thing with the credit card. So I think it's a matter of being mindful of that. Excuse me, being very mindful. And then secondly, being intentional. You just said that when you look at your list, you don't go to a list of things you know you can't afford and try to buy that. You stick with the list of things you can afford and do that in a timely manner. I think that's a self-controlling discipline that's important. But even taking that a step further, the question becomes, okay, so if I have a credit card and I have $1,000 credit line, I call it capacity, $1,000 credit line, and I know that I can at least make the minimum payment each month, isn't that discipline? Well, yes and no. Here's the problem with that, is that if you make the minimum requirement, and there's some math behind it, if you make the minimum requirement and look at the calculation, it will take you a long time, even if you do it on a consistent basis, to pay that balance off, given the fact there's something called interest. The average credit card today is between 20 and 24% interest. So even you have the discipline to buy it and put a minimum each month, it's going to be very difficult to get ahead and improve your credit score and improve your financial situation. So I often suggest to people that what you do is don't focus on the minimum payment, even though that's what the banking or the financial institution or the person who gave you the credit card would suggest. Always try to focus on paying off at least half of what you purchase every time. Ideally, the guidance they say is pay the full amount. Once again, don't buy something you can't afford to pay today. But let's be practical. If you can at least knock down 50% on it and be mindful that you never want to get your balance to be above 30% of the credit limit, you're on the right path. As I said, we all have credit card debt. We've all used credit cards as to come in handy at different points in time. But the question then becomes, is the credit card improving your situation, your financial situation, or is it draining it? Let me give you an example of that. So if you have $1,000, I'm just making up numbers here. If you have $1,000 in your checking account and you have $1,000 on your credit card, the credit card is going to charge you 20% interest per month. And in your checking account,
it's not going to grow 20%.
It's not going to go any close to that. In fact, I sure hope you're getting at least a point and a half, a percentage and a half in interest, right? So when you do the math, if it's costing you 20% and you're gaining 1.5%, at the end of the month, you're going to be much lower than where you started. So you want to be careful to avoid that trap. There's no way around that. Credit cards. Now, there are such things as balance transfers, and I understand they'll offer you 0% interest.
Zero.
I take advantage of that too. Why not, right? Move a credit card balance of 20% down to 0%. But of course, as they say, read the fine print. What does it say? This is a promotional rate for 6 months.
Yeah.
So at the end of 6 months, now we're back to 22%.
And at 3% of transfer fees and so
Are
on.
up front. So there are a lot of catch behind that. But I would suggest that managing the interest rate is key and understanding what it's costing you as opposed to what are you gaining. I think that's key.
So let's put kind of like going back to the example, practical example, someone listening may be like in debt right now, 20,000 debt, things went out of control and they're realizing I don't want to live like, being slave of this debt. That's how Proverbs describe, you are being a slave of the owner, basically, of the debt.
Yes.
So how can we get out of there? You mentioned a little bit about, you want to start increasing your minimum payments.
Yes.
What would be kind of like a practical way of saying, hey, in a year, let's get rid of this debt? What decisions should they make today?
Sure. So the first thing too is, as I say, if you're in a hole, the first thing you do is stop digging. I would suggest if someone has the goal of trying to eliminate or pay off all of their debts, I would first focus on stop adding to the debt, right? Because clearly you're in a position where you're beyond what you can afford.
So basically at this time you're saying whatever those added expenses, whatever those meals out, I'm going to have to limit myself.
You're going to have to limit them.
I'm going to have to bring a sense of reality of where I am.
100%.
Like see myself in the mirror.
100%.
Right? This was very interesting because now that we're talking about this, I went out to eat with my son, and when the bill came up, my son said, "So how many hours did you have to work for that?" And then
sobering.
It was like,
good question.
You're right. I'm here having a delicious meal. I enjoy going out, having some food and everything, enjoying company. But
Nothing wrong
at
with
the same
that.
time, exactly.
Yeah.
But at the same time, this is costing my time, right?
Correct.
So when we start equating, like my time is going directly into a credit card debt. Do I want to live, like that? Or do I want to find space that I can be able to afford these nice things? Maybe I'm not going to be able to afford a lunch every week. But hey, I can find space of saying, okay, once a month, I'm going to treat myself and go out for lunch or something. But everything comes with a sacrifice.
100%. The truth of the matter is there is no magic or mystery when it comes to finance. I don't mean to say that off the shoulder, but truth be told is that at the end of the day, the Bible says you have to count the cost. And quite often people count the cost after they spent it. But no, I think the idea is to count the cost before you spend it. There is no mystery. If you only make a certain amount of dollars, whether you're a high net worth individual or a working person or not working person, you have a certain amount of resources and you have to be very mindful as being good stewards of what you have. There's no mystery behind it. What I encourage people to do is don't figure out what you spent. figure out what it is that you're going to spend, right?
So make the decision even before.
Make the decision before.
Where I am and where can I spend.
Exactly. Most of us that are gainfully employed, you know exactly how much money you're going to make next month in most cases. So
there's no extra check, extra bonus that magically
I
appears.
wish there was. If you know what the resources that you have available to you, plan ahead. And that speaks to the idea of creating a budget, a concept in my house that sometimes is a dicey topic. But when it comes down to creating a budget, I often say to people, don't create a budget based on what you think you should spend. Start with understanding what are you currently spending, because that's what you're doing right now. See what you're currently spending, and then talk about where you need to be, and that's your budget. Understanding that sometimes you have to cut back on the things that you indulge. As I said earlier, the credit card quite often pays for a lifestyle gap.
Yes.
You're basically living.
We all love the nice things we buy,
You'll
the
enjoy
outing, the
indulgences.
vacation.
But
we all love that.
But the fact of the matter is that the reality is, in some cases, I can't afford it. And if I can't afford it, I know that's sad.
But that's difficult.
Yep. And the reality is, you can't. Now, once again, it's all within the context of what is your goal, right?
What
is your goal? If you like living a life where you're dependent on the credit card and you have to work harder because you want to keep up with the things that you want to enjoy, if that brings you peace and happiness, which I would challenge that it probably doesn't, then as my daughter would say, you do you. but truth be told, if you understand that this tool can provide you resources so that you can live a life where you're not dependent on it, then why not focus on that as a goal? And I think having these kind of conversations and becoming more financially literate is a great way to go.
Yeah.
Now, don't get me wrong. Some of these concepts, as I said earlier, my son graduated from college, and he mentioned to me, even as an economics major, he never took a class that literally taught him how to manage credit card. And I thought that was kind of interesting. So where will people learn this? Or Betty, I think back, where did I learn it? I went to school, I went to grad school as well, did a master's in finance, and I don't remember taking a class about personal credit. But over the years, in my experience, I've seen how corporate credit is managed and used, and I realized, wait, you can apply the same base concepts to your personal life. Mm-hmm. And the more I did that and understood it as a tool and understand some of the financial literacy and some of the aspects of finance, it has helped us tremendously. And so that's what I'm happy to share.
Yeah, that's very interesting because you mentioned you already have a set amount of income every month, right?
Most people. Mm-hmm.
So yeah, most of us that if we receive a salary, you already know what paycheck to paycheck will bring.
Correct.
And while you're receiving that paycheck, you are able to afford that credit card payment. Mm-hmm. But then when that paycheck is no longer there, that's when reality hits.
Absolutely. Whether you want to realize it or not, that's where reality kicks in. And the challenge becomes at that point is that people don't realize how stressful this can become. Not being able to meet your financial needs or coming up short each month. And you see, in my opinion, it's even worse. I would say it's even more compounded when you go from a position where you have income and then it stops. Mm-hmm. Then you realize, wow, I was carrying a lot of debt. I was carrying a lot of financial obligations that it can have a detrimental impact on your health. So my thinking is, if you're aware of these things and be mindful of it, I think you should be very intentional about addressing it up front, right? How do I manage through my finance? How can I be more proactive in knowing what I can afford from what I can't afford? With that guidance, it then becomes a little easier to approach my credit card. Oh, I'm not going to buy this particular item this month because I know my income is not where it used to be. And this particular item is literally beyond what I can afford.
Yeah, and that's where reality hits.
Absolutely.
Like I used to have this income, but I don't have it anymore, but I like the lifestyle.
Yep.
And those are things that kind of hurt,
It's understandable.
You want to keep the same lifestyle that you had. Mm-hmm. So it takes intentional discipline.
Absolutely.
Of actually, sitting with yourself. I've seen this meme of saying, I'm having a meeting with myself and, it's like you're in the mirror and everything, but that's a reality.
Absolutely.
You need to kind of sit with your finances and say, I need to accept this reality.
100%. So in my role as the CFO of a company, especially a publicly traded company, I have to have regular meetings to talk about finances. And I have to look forward to what's coming, understand what my resources are today and how can I increase my resources. I think you as an individual, you are the CFO of your finances. Mm-hmm. It's your responsibility to have that meeting with yourself or to have that meeting where you're gathering the information you need and making intelligent decisions about that. And I think there's no way to avoid that if you want to be successful.
Yeah, and I like that analogy because we don't see ourselves as the CFO of our finances, right?
Sounds
we
strange,
kind of
doesn't it?
exactly like someone that you and I, we're in the finance area,
Sure.
so we're kind of more relatable to that term. But someone that's doing something else, they're like, well, wait a minute, CFO, I don't have that knowledge of numbers. But actually, everyone needs to understand numbers to some extent.
Yes.
Everyone needs to understand their finances. And there's so many resources.
There are.
There's so many resources that are available online now. There's a lot of people that have Instagram accounts, all over social media that they give you, advice and different resources on a daily basis. So why not reach out to those?
Absolutely.
So I like the intentional discipline, the sense of reality, and how can I have a healthy relationship with my credit card?
So a couple things. I think the more information you have, the better. One, I was quite surprised when I was talking to a couple of friends of mine the other day, and I asked them, what interest are you paying on your credit card? And they didn't know. And I thought, wait, that's a little interesting. And these were people who are working class people,
Yes.
educated people, and so forth. And I'm thinking, okay, well, they don't know. Then quote unquote, the average person may not know either. I think getting information is where you start, right? You probably will be surprised to discover that on your credit card that you may be paying more in interest than you thought, especially for people who use the promotional rates. That's one of the things they
Yes.
do with young people when they
Yes.
start their credit card. Get the
Well, and
credit card.
even to to us that we've had, I always get this in the mail.
The offers.
All the offers, 0% interest, and we'll give you a bonus if you transfer money. And
Yes.
if you spend, one of the bonuses is you get all this amount of miles if you spend 10,000 in the first 6 months. And I'm like, so you want me to spend 10,000? Like, wait a minute.
That's an amazing offer.
That's a great trade-off. Like, yeah, sure, I'll get all these miles, but hey, I need to spend the money first.
Yes, that's a catch. And the other one that catch me too, the one that stands out in my mind as well is when you go to a department store and just as you check out and say, oh, by the way, do you want to apply for a credit card today?
Yes.
We'll give you
Yes.
15% off of this purchase. And you're sitting there going, but that's not even half the story. You're going to be 15% off of this purchase and charge me 30% for the
Later
next 30 years. I mean, like,
And you'll have me as a customer, as a recurring customer.
for sure, I have to come back and pay their statement every month.
Yeah,
I find that one intriguing, and they try to be creative in how they entice you. When truth be
Yeah.
told, just like anything else, what's the cost? Getting information is the point I'm making in terms of getting information to help guide you in your decision making is key. Knowing what it entails and how much it costs, I think is the starting point. The more I've studied credit cards in terms of understanding the options available to me as an individual, I'm also discovering that not all cards are created equal. Now, I'm not going to get into the rewards program and the incentives, but I also discovered there's something different between a credit card and a charge card. I was like, what's a charge card? There are some credit cards out there, I call them charge cards, where they expect you to pay off the balance at the end of each month, which we said earlier, it's a good thing. But they charge you an exorbitant annual fee to have the card, and then turn around, if you don't pay it off at the end of the month, they charge you a penalty on top of that. You're like, well, wait a second. That doesn't sound like a credit card. Or better yet, that's a tool for a specific purpose, right? Understand not all cards are created equally. So my point is, having the right information is a great place to start.
What is applicable to you as an individual, where you are, where your finances, and
100%. And understand the purpose of that particular tool, right? There's a purpose behind it. The more knowledge you get, the better. And just the other day, I was talking with a friend of mine, a high net worth individual. And I said, I've been working with you now a few years. I've learned quite a bit. But when do I graduate? He said, well, truth be told, when it comes down to business and finance, you never graduate. You always learn.
Yes.
And that's the key. So I don't sit here as a person who have all the answers by any stretch of the imagination. I continue to learn every day. And one of my personal goals is to make sure that as I learn, even now that I'm steeped into my career that we've established in a few years, I've learned that I want to teach my children as much as I can, especially knowing that they're not getting it from schools. At home, I think it's an important place to share that knowledge, not just in terms of what I've learned, but also to demonstrate that. I want them to see, okay, hey, we have 2 boys and a girl. I want to be able to say to my sons and my daughter, okay, look, this is where we are today as a family. Here's the balance we had last month. Here's the reason why we can't go on this trip or can't have this meal, because we're getting here. And I want them to be able to see, I was here at the end of last month. Now, where am I at the end of the next month? I want them to see progression demonstrated in a direct way.
And that's great that you share that information with them, because a lot of the times our kids, they see us as a credit card, right? and we make that mistake mistake.
Yes.
Whenever they want something, oh, sure, even if we can't afford it, we want them to be happy or be comfortable or give them a life that we cannot afford. So, but when we start sharing of saying, hey, you know what, we need to wait for this because we're planning a trip.
Yep.
So they understand
The
like
goals.
there are limits.
Yep. Absolutely.
It's not endless money flowing in. Even if you have a steady income, even if you have a salary, a job, and everything, it's good for them to start seeing those limits
Absolutely.
of we operate within a
These
certain
parameters.
exactly.
But it's funny you see that too, that we, the parents, become the credit card. So
Yeah.
I'm going to change that language because I've learned recently on having teenage kids. So what they do now, they send you Zelle requests. Right? Zelle requests. So now
I'm not there yet.
You're not there yet. Okay, well, let me tell you what happens. So there's a Zelle request where they have an account, and they can send me a Zelle request in the system. It pops up in my bank account and says that your daughter, your son is requesting a certain amount of money. So one day, my daughter, she sent me a Zelle request. She just discovered this possibility. And her Zelle request was for $1. Just because she wanted to test it. So she said, so I called. I said, well, why are you sending me a Zelle request for $1? She said, well, I just want to make sure this thing works.
Want to prepare.
So you know what I did? I declined it. $1.
Now you know that it came through.
Now you know it works. Exactly.
That was a good strategy.
I said, now you know it works. Now, when the time is right and there is a need, we'll use this tool responsibly. But right now, yes, it works. Declined.
That's funny.
True story.
But yeah, we start instructing them in how life works.
Absolutely.
Because they're going to later on understand that not everything is available, right?
Absolutely.
That there are some limits that you have to go through.
And by the way, habits continue with you for life. One of the reasons why credit card companies market to college teenagers or young adults is because they know 80% of people who start with a credit card maintain that account for the rest of their lives, which I find very interesting. Right? There's psychology behind it, right? So I think demonstrating good habits when it comes down to finances in a very responsible way is very important, especially for young children. That's in our household.
Yeah, and now that you're talking about habits, my grandmother, she had a third grade education, and she was so good with money management. She was very good with money management. So sometimes it's not about how much you know, but how much you're willing to discipline yourself. She became a widow at a very early age, had to raise nine children. And one of the things that I remember is that when she was in her, last days or last stage of her life, one of the things she said is, I'm going to make sure that I leave all my funeral paid for. And you're talking about a lady that she didn't earn a lot of money, she didn't have a lot of wealth, but whatever she had, she was very careful on how she was going to be spending, very intentional.
Yeah.
And if she was going to spend money in certain ways, she always made sure that she had the money for it.
So smart. So wise.
So when you're talking about habits, it's habits that we have for ourselves, that we pass on to our children and to those that are around us.
100%.
Because as Christians, we want to make sure that we reflect a life, free or to some extent, not trapped in debt.
Yes,
not
100%. Constantly,
because debt also gets you sick.
Absolutely. It's stressful.
It's stressful. Yeah. And, God wants us to live with joy. He wants us to be healthy individuals. And that's why, he gave us as managers of the resources that he's entrusted to us.
Absolutely. Absolutely. I also found it interesting. I was talking to my son earlier today. I told him I was going to do this podcast. He actually gave me advice.
Oh, I like to hear that.
I was fascinated. He said, I'm going to give you advice, Dad, that an older person in our church gave him. The older person in church told him that once you start to work and have a job, only spend 50% of the money you make and you'll never be broke.
Oh, wow.
That was a quote. As a matter of fact, he hit me with that on the way out the door just a few hours ago. And I was thinking,
50% is a lot.
I thought, that's amazing. But then it occurred to me, as you were just talking about I think you said your grandmother. Yeah. It just occurred to me, too. I was thinking back to my family. They're immigrants coming to the U.S. where the classic story, they didn't come here with very much, much less much of an education. And I think back, one of the reasons why they were able to live a complete life, my father now is in his 90s, is that they were very intentional about how much they saved on a regular basis. I'm not sure if it was 50%, but they were very intentional. I understand it's cultural and it's also an era where they've been through the Depression and so forth, so they're very careful with their money. Yeah. But some of these basic habits and concepts, holds true. I can see in their lives that they were able to save and be able to live a complete life. I think that's important. Now, I admit that our society has changed. We've become a more credit society, and I understand that. But some of these basic principles go a long way, right? The more intentional you are about saving and managing your resources, the more likely you'll achieve financial success, however you define it.
Well, I like that. Some of the things that I picked up is, this 50%, it's kind of like a new concept that I had not heard before. So I don't know how much I could apply that to my life, but I like it. Especially when they're recent graduates, because I think that's when you have your best chance of structuring yourself into saving. And maybe throughout the years, you're going to have to start restructuring the amount you can save. But I like starting at a young age.
Absolutely.
So one of the things that I picked up, kind of recapping, it's the credit card is a tool.
Absolutely.
It's a tool that needs to work for you.
Right.
Not you for the credit card. Correct. Right? Correct. Find out what is your credit card interest rate. Like right now, go into your app, go into online service and find out how much am I spending on credit card. Even some companies, some credit cards, they'll do a summary of all the fees that you've paid in a year.
Yes.
Like, hit yourself with that number.
Yes.
Know
your reality.
Exactly, because it could be that you're spending $2,000 a year in credit card fees, and whatever you got the reward for, that reward that comes in March for some of us, and you're like, oh my, I receive a check for $500. Well, guess what? $1,500 of that was from interest. So actually, that reward, you were paying for that reward.
100%.
It's costing you money to get that reward.
Costing you more than you think.
So that's another hit of reality.
Yes.
30%. Make sure that if you have a limit of 1,000, that 30% of that remains unused.
I'm sorry. The maximum you should actually charge on your credit card is 30%.
The other way around.
Yeah, the other way around.
Okay, so
and this is the way to build your credit.
I like the other way around. Let's keep it the other. Let's keep space of 30%.
That would be nice. But no.
Spend 30% of your limit.
Only charge up to 30% of your limit.
Well, and now you're limiting my capacity.
There's reality coming at you right now.
Yes.
But basically, when you do that, that's the way to manage your credit scores.
Okay.
Yeah, because most lenders don't want to see that you are overextended either, right? So even though the bank has given you a credit limit of 1,000, keep your charges under 30% in total any given month.
So you can't charge more than 30 until your next cycle.
Yes, exactly. At the end of the cycle, you never want to be a balance more than 30%.
So you want to be catching that cycle. Like, when does it end? Like, I'm ready for the next 30%.
Be aware of it. If you charge something for $700 and you go home and pay it off the same day, you're never at 30%. That's beautiful. But if you want to carry a balance, never let it be more than 30%. Is what's recommended.
So if you can pay it in the day, pay it. But if you need to carry, don't carry more than 30 before, until the deadline for the payment or the due date.
Correct. Absolutely. That's
okay,
right.
So sense of reality. Always make sure that you're checking on yourself and saying, hey, my salary was adjusted this year, so I'm going to have to adjust some other stuff.
Absolutely.
Tuition rates increase, which I'm dreading that moment every year. Like, oh my,
I'm there now.
Yeah, kids, they spend a lot of money.
They're expensive.
They're expensive to have kids. So
absolutely,
we need to prepare and adjust.
Absolutely,
constantly adjustment, and that's going to be intentional discipline.
Absolutely.
I think that's kind of like the biggest takeaway.
Yes.
Be intentional in how you manage your credit cards.
Absolutely.
Don't just slide the card, buy those shoes, buy that purse. I love passing on my credit card, but what is behind that charge?
Absolutely. You can still buy the shoes, just don't buy too many.
As long as they don't go above the credit limit.
30%, there you go.
But they can be from the things that I cannot afford. So yeah, thank you so much for this conversation.
Oh, my pleasure.
It's been a great moment to be able to talk about credit cards, to learn a little bit more, and to keep ourselves real.
Absolutely.
Keep ourselves real. And God gives us all the resources, but we need to be wise stewards of everything that has been entrusted to us.
Absolutely.
So thank you very much for sharing.
Thank you for having me.
Information
it's
for
been
us.
It's been a pleasure.
It's been great having you today.
My pleasure.
So thank you very much for listening to our podcast today. We hope to see you next month. Make sure to subscribe and follow our podcast. Have a great day.